Most is the real estate industry, with a whole host of relaxations, including allowing companies to sell 100% stake in completed projects. It's also good news for media companies, where a higher foreign investment cap has been allowed in both the news and the non-news broadcast categories. Nayantara Rai joins in with all the details. Nayantara, let me start with real estate and do help us understand this. There are lots of conditionalities linked to foreign money coming in. Some of them have been done away. How significant is it?
It is very significant, Surbhi. And it's not significant just for builders that are cash tight. It's also welcome news for consumers who've been suffering on account of project delays because builders haven't had the money to complete the projects that they've sold to all of these consumers. So back in 2005, the government had actually allowed 100% FDI in construction, but with conditions. Today, in a landmark development, the government has done away with several of those preconditions. For example, it's done away with the minimum floor area of 20,000 square meters. That condition no longer exists. The minimum capitalization norm has been set aside, which was earlier at $5 million, which basically means however big or however small a project is, it can now attract FDI, and there is no minimum capitalization, no minimum investment that a foreign investor has to commit to. So that is huge. It should help more foreign investors enter the construction business here in the country. The second one, and this is also huge, what the government has now allowed is it's allowed FDI in completed assets. So far, it was only allowed in greenfield projects. So all of those developers that actually have completed projects but don't have run out of money or have huge debts, now they can actually sell their completed assets to foreign investors. And there has been a lot of excitement over this because once you talk about completed assets, A, there is no risk of when is this project going to be completed, and secondly, because the asset is completed, one would imagine all the title deeds, all the approvals are already in place. So that is also one big development. Now, one reason foreign investors have started to shy away from the real estate space is because there were no exits. We've seen what's happening in the IPO market. We've seen what's happening with the realty stocks on the Lal Street. So, what about exits for all the foreign companies that had come to India? So what the government has also done, and I might say it's a very smart move, is to, restore confidence of the foreign investors by improving the exits, saying while the 3-year lock-in period will stand, one foreign investor can exit and sell to another foreign investor without government approval. So let's say one private equity firm that wants to exit, has been in India for 7 years, no longer wants to stay here, is limited partners, etc., pressurizing, it can sell to another private equity firm. This is also fantastic news that's coming in for the banks. We know the kind of high NPAs, the kind of stress the banks have been under. There's a lot of collateral that they have in the form of real estate assets, not just of realty companies, but also of all kinds of companies. The whole collateral, they can now sell those to foreign investors. Before going